Hello and welcome to AI Market News by LM. Alright, so Japan just kicked off the week with an absolutely stunning political landslide, and it sent some major shockwaves through the markets. The big question now in everyone's mind is, are new highs next? Let's dive right in and find out.
So the week literally kicked off with this number right here, plus 5%. I mean, wow, that was the explosive opening for Japan's Nikkei index. You know, a move like that it's pretty rare, and it really set the tone for global markets as traders scrambled to react to a weekend of really dramatic news.
So, what on earth caused this massive rally? Well, it all comes down to politics. A truly historic landslide victory in Japan has injected this huge dose of clarity and, maybe more importantly, stability into the market. And that's created a whole new dynamic for the week ahead.
Okay, so to really get a grip on why the market is so excited, we've got to look at the details of this historic win and what it all means for what's being called the Takaichi trade.
And it's really the scale of this victory that's the key here. Look, this wasn't just a win, it was a historic mandate. We're talking about securing a supermajority, over 350 seats. That gives the ruling party the power to override a veto from the upper house. That kind of political stability? Well, Japan hasn't seen that in decades. And for investors, let's be honest, stability is gold.
And that brings us right to what investors are already calling the Takaichi trade. Basically, it's a big bet on her pro-stimulus and strategic policy agenda. Money is just pouring into sectors like defense, artificial intelligence, computer chips, and even nuclear power. Everyone's anticipating a huge surge in government spending and support for these areas.
But here's where the story gets really interesting. Because while stocks were absolutely soaring, Japan's currency, the yen, did something completely unexpected. It basically defied all typical economic logic.
See, normally, when a government signals it's going to spend big and, print a lot of money, its currency weakens. That's just Econ 101, right? But in this case, the yen actually got stronger. It strengthened all the way to the 156 level against the dollar. So, what in the world is going on here?
Well, the answer really comes down to one thing: intervention risk. The yen strengthened because Japanese officials immediately sent this crystal clear warning to the market. They basically told traders, hey, don't get too carried away here. And just the threat of them stepping in directly, that was enough to put a solid floor under the currency.
And look, this newfound stability in Japan, it wasn't just a local story, not at all. It helped fuel this wave of optimism that just spread right across global markets, creating what we call a risk-on environment.
So, how do we measure this mood? Well, one of the best ways is with the Fear and Greed Index. It's a pretty handy tool, actually. It combines 7 different indicators to give us a single reading on whether investors are feeling, fearful or greedy. And more greed, that typically signals a higher appetite for risk.
And boy, was that risk-on appetite on full display in the US markets. We saw the Dow, the S&P 500, and the NASDAQ all posting some really strong gains. It seems like that political clarity coming out of Japan really gave investors the confidence to jump back into riskier assets, and it especially sparked a nice rebound in the tech sector.
All right, so with the week off to such a powerful start, what's on the radar now? What should we be watching? Let's take a look at the key events that could either keep this rally going or maybe throw a wrench in the works and bring back some volatility.
Now, while the political news out of Japan is a huge tailwind, let's be real, the market's obsession with central banks hasn't gone anywhere. We're still glued to tools like the CME FedWatch. It's what shows us the probabilities the traders are placing on what the Federal Reserve might do next with interest rates.
And if we pull up the economic calendar from investing.com, we can see some pretty high-impact events coming up on February 9th. Now, we'll get some consumer inflation data, which is always interesting, but the main events are really the speeches. We've got Fed officials Waller and Bostic talking, and also ECB President Lagarde. Any one of them could really move the markets.
So all of this leaves us with the central question for the rest of the week, doesn't it? On one hand, we have this incredible newfound stability from the world's 4th largest economy. But on the other hand, we have this continued uncertainty around what the world's most powerful central banks are going to do next. So is that a recipe for new highs, or is it a setup for a whole lot of volatility?
This video is automatically generated by NotebookLM, an AI-powered tool. The reference sources used in this summary are listed in the video description. As this content is AI-generated, there may be errors in proper names, pronunciation, or unnatural speech. This video does not provide investment or trading advice. Please make investment decisions at your own discretion.
Thanks for watching. Don't forget to like and subscribe.